If you are an investor in the stock market, then this video is for you. Each and every investor on his own is also a portfolio manager. You are managing your own portfolio, right? Now the question is, are you doing it in a right manner? Try and answer the following questions and you know all the reasons. Let's begin with question number 1. Have you diversified optimally? Diversified optimally means to diversify sufficiently in a most favorable manner. It shouldn't be excess that you feel exhausted by it, like holding 30, 40, 50 companies in your portfolio. That is too extreme. At times you'll forget that you own the company in the first place. That's messed up. And it shouldn't be too less that its sheer purpose itself is not achieved. So why do we diversify? Because we do not know the actual risk involved, the real risk. We just want to reduce the volatility, the ups and downs, and to have a structured portfolio that is stable, well spread out amongst different companies. So don't forget to diversify. Now comes your second point. How's your weightage for each company? Wait, what does weightage mean? Weightage is nothing but what part of your portfolio is allocated to one particular company. Now this is important because here you are doing the real risk return analysis. Here you are strategically thinking how much should I invest in this company before it starts becoming a burden to my portfolio. Now you may think that companies such as HDFC, Reliance, DMart cannot become a burden. But if those companies are actually pulling down your portfolio, then you will feel odd about it, right? So give importance to weightage a company can and should hold in your portfolio. Now the third point is, have you invested in all major sectors? Sectors such as banking, FMCG, infrastructure, pharmaceuticals, technology, that is IT and others, they have high growth potential. So check whether your portfolio consists of companies from any of the above mentioned sectors. And after this video, go to your portfolio and list down all the sectors that you have touched and comment below. Now don't worry if you haven't touched any particular sector. That's fine as long as the sector you have invested are giving better returns. Now the fourth and the final point, and I'm sure all of you are familiar with this. How do you handle a losing stock as opposed to a winning stock? Usually our first action or reaction will be to cut down the losing stock and hold on to the winning stock. But is that all it? What if the market itself is quoting the price wrong? What if the time for your company has not yet come and you are prematurely selling it out? In such case, there is no right answer or there is no one way to approach such situation. All you can do is, while either buying and selling any company, do it in various tranches, various segments. Like invest 50% out immediately, and then the second tranche as 30%, and then the final as 20%. So this goes both in selling and buying. This way you get to average in your buy and sell calls, and it also gives you time to think what you are doing, whether it is right or not, like giving yourself time to re-verify your decision. So these are the 4 points to be remembered by you as a portfolio manager. Thank you for watching.